A new bank rule in 2026 is raising serious concerns, and for many Americans, especially seniors, the fear is growing fast. Because here is the terrifying part. When a bank freezes your money, even temporarily, your entire life can be thrown into chaos. Stay with me all the way to the end, because one of the most important warning signs is something many seniors overlook completely until the damage is already done. Now imagine this. A senior wakes up expecting a Social Security deposit. The electric bill is due, the landlord is waiting, the pharmacy needs payment for a refill. But when they try to use the debit card, it is declined. They call the bank and suddenly they hear words like temporary restriction, verification hold, compliance review, or suspicious activity monitoring. In that moment, it does not matter that the system thinks it is protecting them. What matters is that they cannot reach their money. This is why the topic has become so urgent in 2026. As fraud prevention gets stronger, ordinary people can get swept into banking controls they do not fully understand. Let's be clear right away. Not every new bank rule means all accounts will be frozen. Most people will continue banking normally, but the risk rises for people whose accounts trigger internal alerts, and seniors can be especially vulnerable, not because they're doing anything wrong, but because their financial behavior can change in ways that systems misread. A one-time large deposit, a transfer to help a grandchild, a new phone or computer login, a sudden medical bill, a check from an insurance company, legal settlement, sale of property, inheritance, retirement rollover, or back payment from a government agency. These can all attract scrutiny if the bank sees activity outside your typical pattern. That does not automatically mean you lose your money, but it can mean temporary holds, documentation requests, or delays that feel devastating when your bills are immediate. Now let's talk directly about financial benefits, because that is where the emotional impact becomes real for seniors. If you receive Social Security retirement benefits, the amount you get each month depends on your work history, earnings, and claiming age. Some receive under $1,000, some receive around $1,500 or $2,000, some receive more. If you receive SSI, the amount is tied to federal benefit rates and any applicable state supplement, and for many low-income seniors, it is absolutely essential for survival. If you receive SSDI, your payment depends on your prior earnings record. Survivor benefits depend on the record of a deceased spouse or eligible worker. VA benefits have their own structure. Pension income varies. The point is this: whatever the source, if the money lands in a bank account that suddenly becomes restricted, the amount does not matter if you cannot access it. Whether it's $800 or $3,000, frozen money feels the same when you need it to buy food today. Who is most likely to be affected by these types of bank restrictions? First, seniors receiving government benefits by direct deposit, especially if they rarely use digital banking and may miss alerts or verification requests. Second, people who recently changed banks, updated account ownership, or switched routing information. Third, anyone who receives an unusually large payment, such as back pay, inheritance money, insurance proceeds, or a tax refund bigger than normal. Fourth, people who move money quickly after deposits arrive, especially if transfers go to family, online payment apps, or unfamiliar accounts. Fifth, those whose accounts show activity from new devices, new locations, or patterns that trigger fraud systems. Sixth, seniors who have been targeted by scams, because if the bank suspects exploitation or unauthorized activity, it may freeze or limit the account while investigating. In some situations, that protects the victim. In others, it creates major hardship while the review is happening. And here is where curiosity turns into real suspense. Some seniors assume government benefits are completely untouchable once they hit the bank, but the reality is more complicated. Certain federal rules protect specific benefits from some types of garnishment or seizure, and direct deposited federal benefits often receive special treatment in account reviews involving legal claims. But that does not mean a bank cannot temporarily restrict access when fraud, identity issues, suspicious transfers, or account ownership problems arise. There's a huge difference between protected benefits and immediate access to funds during a banking investigation. Even money that is legally protected may become practically unavailable for a period of time if the account itself is under review. That is the nightmare many people do not see coming. Now let's dig deeper into how much money could be involved. If you're a senior living on Social Security alone, your entire monthly survival amount could be trapped. If you receive both Social Security and pension deposits into the same account, the frozen amount could be significantly larger. If you're waiting on a retroactive disability payment, a survivor benefit adjustment, a tax refund, or a back payment correction, you could suddenly have several $1,000s in the account right when the bank decides the activity looks unusual. That is when the emotional shock becomes overwhelming. People think they're finally catching up, only to discover the money is there on paper but unavailable in reality. And for someone already under financial pressure, that kind of delay can feel like a betrayal. The latest government and banking updates continue emphasizing fraud prevention, anti-scam systems, anti-money laundering compliance, know your customer enforcement, account verification standards, and stronger scrutiny of suspicious transactions. Banks are under pressure to monitor patterns more aggressively. Regulators want institutions to detect elder financial exploitation sooner, identify scam behavior faster, and reduce unauthorized losses. That sounds good, and in many cases it is. Seniors lose enormous amounts of money each year to scams, fake investment offers, romance fraud, family impersonation scams, fake government calls, and fraudulent transfers. Stronger bank monitoring can stop some of that. But there is a cost. The same protections can also create false positives. That means ordinary, honest customers get caught in systems built to look for danger. One of the most heartbreaking examples is when a senior tries to move money after being scared by a scammer and the bank freezes the transfer. In that moment, the bank may have saved them from losing everything. But what if the customer actually meant to send the money to a trusted family member for rent or emergency help? What if the transfer was legitimate? Then the hold becomes a source of anger and confusion. This is why communication matters so much. Banks may not always explain instantly what happened, and seniors often feel humiliated or powerless when asked to verify their identity or justify their own transactions. But understanding why holds happen can help you respond faster and avoid escalation. Now let's talk step by step about what seniors should watch for. If your bank has introduced new identity verification requirements, take them seriously. If you are asked to confirm your contact information, do not ignore it. If your debit card, phone number, email address, mailing address, or device changes, update the bank through official channels. If you receive a large deposit that is unusual for your account, be prepared for questions. If you plan to transfer money to a new account or family member, understand that the bank may see that as unusual activity if it is outside your normal behavior. If you travel, especially out of state, let the bank know if needed. If your account is joint, make sure ownership records are accurate. If someone helps you manage your money, ensure any power of attorney or authorized signer paperwork is correctly filed. These small preventative steps can make a huge difference when banking systems start asking hard questions. And now here is one of the biggest hidden dangers, the combination of banking rules and digital confusion. More seniors are being pushed toward online accounts, mobile apps, verification codes, fraud alerts, and electronic notices. But not every senior is comfortable with this technology. Some miss text alerts, some do not recognize official emails, some accidentally ignore fraud warnings because they fear scams. Others click the wrong link because it looks legitimate. Then the account gets locked for safety. This is not a minor inconvenience when you're 80 years old and trying to buy groceries. It becomes a crisis of access. That is why trusted family support, official contact methods, and careful monitoring are so important. If you want clear updates on Social Security, SSI, SSDI, banking rules, direct deposit problems, senior financial protections, benefit changes, and urgent money alerts that could affect your future, subscribe right now and turn on notifications. This channel is here to help seniors stay informed, stay protected, and stay ahead of the changes that could put their money at risk. Subscribe today because the next update could be the one that helps you protect your check before your account gets frozen.